Hey, Mike Swanson here. I bought a couple positions today in my portfolio. This is my open portfolio, or it mirrors my real portfolio, but I'm using Google Finance to track it with you. And there's a CSV spreadsheet file below this video. You can click to download it yourself if you want to see it. But anyway, I bought some positions. I want to explain to you why I bought them and what they are and what I'm doing here. So I put together this PowerPoint presentation, and let's start it. 3 new buys in commodities and gold stocks. Okay, why? Well, I believe that commodities are on the verge of a critical breakout. It could begin at any moment, probably sometime in August, September at the latest. But what you're looking at here is the CRB Commodity Research Bureau Index. It's been in a bear market decline now for about 1.5 years since the spring of 2011, just as almost every stock market in the world has been in a big correction or bear market during this time too. Some of them for 2 or 3 years. You know, if you just watch S&P 500 and the NASDAQ like everyone else, you don't know that, but we do. But anyway, all these world markets had a big dump in May and June for about a 10% drop all at once in the last couple of days of that decline. And usually declines like that mark the end of bear markets. So it seems like markets across the world here put on important bottoms at that time, and they've since bounced back pretty strong. And you can see the Commodity Research Bureau Index, for example, has bounced back up to this downtrend resistance line, and it's now pausing below it. If it breaks above that line, I believe it's going to break out into a new bull market and be making or testing its highs probably sometime next year. And the thing is, such a breakout could happen at any moment. You know, we right now support is the 50-day moving average, which is this blue line right here, and you can see that on almost any market now that you track. But so you're saying then the potential downside for the CRB is about 4% from here down to that line, but if it breaks out, bam, it's going to take off. So I put some positions knowing I'm risking about 4% on the stuff I bought, but they could break out at any moment, and I don't want to be buying after they break out. And my whole goal, as I've been explaining, is to average in different stuff. Gold is in the exact same position. Gold's been in this trading range consolidation or bear market decline, whatever you want to call it, since August of last year. Support, you know, let's say 1550. Well, actually, the 50-day moving average is right now about 1600. It's floating right above it, and it's been basing out here. And if it breaks the top of this base, bam, it's going to take off, and I believe it's going to test that downtrend line. That's probably the new resistance level, and I don't think it's very meaningful. If it breaks that, it's going up here, and I'll show you that projection later. But let's talk about the world markets first. This is EEM, the Emerging Markets ETF, and lots of global markets look exactly like this, especially in Europe. And I think this is what's happened, is they're basing out here, and I think this is actually stage 1 consolidation phase, and that these markets are going to turn up towards the end of the year and enter new bull markets. If that's the case, this is sort of like the pattern I think we'll see play out. I've drawn these circles to show you what I think are the trading ranges we're going to see the markets be in during the time I've circled here. The lines are just rough projections, but to basically sum it up, I think from now to, let's say, October, you know, we're probably going to see this rally continue and then a decline back down for a consolidation, digestion of that rally. But then if there's a turn up towards the end of the year, these things are going to take off in new bull markets, 2 or 3 year long bull markets, I believe. And that's why I started to buy some telecom stocks and some global ETFs, such as in Russia and Turkey. My whole plan is to average into a nice position from now to the end of the year that I'll be able to hold for like 2 years and I think make a great return. So what did I buy? A GCC, it's a commodity ETF, a fund that closely mimics the CRB Commodity Index, which I just showed you earlier. So I want to be invested in commodities because the thing is, I think commodities are going to break out ahead of all these other markets. I think commodities are going to go into bull markets first before Europe, before most global markets do. So I think what can happen is commodities can surge and jump up faster over the next 6 weeks, 2 months, whatever. And then if there's a pullback, across the world, I don't know, that could be a big one. Let's say a 5% drop, 10% for some markets, whatever. I think what will happen is commodities will correct back down from a higher level than everything else. So I don't think they're going to pull back that much later on compared to where they are now. For example, this GCC thing, which mimics the CRB index, I think the next real resistance level for commodities are their fall and spring highs and their upper 200 Bollinger Bands. If they break that trend line, remember the CRB index? If it breaks that, I think it's going to rally up to here, basically their highs of February, March, and then we get a correction later this year. I think they just take it down, just a little bit, and then bam, take off for a big rally from wherever that would start till springtime sometime. So bottom line is, I think commodities are leading the way here. So I bought that GCC GDXJ, which is a gold stock ETF, which holds a position in mid-tier gold stocks, some more junior gold mining companies. Most of them are producers or about to be in production, and it pays a 6% dividend because it also has some investments in some fund-producing assets or income-producing assets. So I really like this. I'm considering these things I'm buying here core positions. The GCC position isn't really that volatile. GDX is much more volatile, has much more upside to it. This is a position I think will more than double in the next 2 years or so. So anyway, the way I see it playing out is popping up August, September, having a short-term pullback, probably not much of one, then just taking off from there and for a great ride. And I already own Newmont, which will pretty much trade along with it too. GLD, I wanted to buy a core position in gold stocks, so I bought the GLD gold ETF, and all it does is hold gold. And you can see I've drawn something, a projection of how I think gold could trade. Remember the trend line on gold I showed you earlier. It breaks that. I think the next resistance is the 1/3 retracement level of its most major high and the low here. But I really think ultimate resistance, again, is this point. Same thing I showed you with the GCC and CRB index. Basically the upper 200 Bollinger Band. I think it can reach that towards the end of this year, early next year, and then break out of that. The thing is, to me, the new bull market in gold and commodities is going to start when this trend line is broken. Whereas the new bull market for other things across the world, I think will start probably, the fourth quarter this year, first quarter next year. So I think these things are trading well 3 months ahead of everything else, and I want to build a core position in commodities. Commodities are likely to lead. In summary, also seasonally commodities tend to break out August and peak in the spring. If they break out in a bull market's first tier ahead of everything else, they'll likely become leading sectors the rest of this year. But at some point, leadership will shift into European stocks and emerging markets, I think, next year. So my strategy going forward of my portfolio is to invest in commodity-related stocks and emerging market stocks and Europe stocks, and sort of like a half-half deal here. And what I'm working on now is buying core ETF positions, which I've basically completed with my purchases today. And I'm going to look to add on to these positions later this year with individual stocks. They'll mostly be like some of the things I've already seen me buy: telecom stocks paying dividends, in mining companies, maybe some stuff I don't own that pays dividends, like FCX, Barrick, AUI, maybe HL or PAS. There's all kinds of, it's so many stocks out there that look great. But what I'm going to end up having to do is add to my account with more money or by a margin. I've got, my net worth is much more than the accounts you see, but I have to slowly shift money into that account to get it back to where to get it fully funded. But that's a process that I'm doing. So anyway, again, here's the portfolio. Click below and you can download this for yourself if you need to see it in a CSV file. And I'll be talking to you later.